Hey everyone, welcome back to the Crypto Code. Today we're breaking down 5 altcoins that sit closest to US market structure conversations and institutional crypto rails. And we'll end with a quick pick one framework so we can decide which coin deserves our attention based on levels and risk, not vibes. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. Okay, so when US regulators and policymakers get more involved with crypto, markets watch who's in the room. Not because any coin is guaranteed to win, but because capital tends to prefer networks that are useful, liquid, and easier to integrate into compliant rails. A seat at the table doesn't mean instant pumps, but it can highlight which ecosystems are being taken seriously. So we're covering 5 names that repeatedly show up in that intersection: Uniswap, XRP, Chainlink, Solana, and Ethereum. And we're using the same spoken checklist for every coin. We ask, what's the role? What's the structure? Where are the key decision levels? And what's invalidation? The level where we admit we're wrong and reduce risk. If we can't answer those 4, we don't size up. Our first coin is Uniswap. Uni is the on-chain liquidity story. The way we handle Uni is simple. We identify the major zones the market has respected before, and then we watch whether Uni is holding a base or sliding under it. If it's stabilizing and starting to put in higher lows, we can scale in. If it breaks the base and can't reclaim it, we step aside because hope is not a strategy. Coin 2, XRP. XRP sits in the payments and settlement bucket, and it can go quiet for long stretches and then expand fast when sentiment flips, so we keep it mechanical. We define the range XRP has been trading in, and then we watch whether price is reclaiming that range or getting rejected by it. Below the range, we stay neutral to cautious. Back inside the range with follow-through, we get constructive. Coin 3, Chainlink. Link is infrastructure, data feeds, and connectivity for on-chain finance. Here we focus on multi-cycle support and momentum behavior. We want to see selling pressure fade, either price holds key support while momentum firms up, or price dips slightly while momentum improves. The plan stays if-then. If support holds, we add in layers. If it breaks and stays broken, we wait for the next historical demand zone. Coin 4, Solana. Sol is the ecosystem, momentum play, apps, users, and liquidity when conditions are favorable. We identify the big pivot zone that price repeatedly reacts to, and then we watch relative strength. Does Sol hold up better than the market on weekdays and bounce harder when conditions improve? If Sol holds the pivot, we can target the next resistance zone. If it loses the pivot and can't reclaim, we respect the downside quickly because Sol can move hard in both directions. And finally, Coin 5, Ethereum. ETH earns the spot because it's the base layer for a huge chunk of DeFi and tokenization activity, and it often sets the tone for broader altcoin rotations. Our ETH checklist is short. Is ETH acting strong or weak versus the market? What are the key weekly decision levels, and is structure improving or deteriorating? When ETH is reclaiming major levels and holding them, risk appetite tends to improve across the board. When it's losing them, we keep sizing conservative. Now, the connector for all 5 is one macro variable: clarity. Big capital hates uncertainty. When rules get clearer, confidence rises, liquidity follows, and price structures can improve faster than people expect. That's why we treat regulatory direction as a tailwind for sentiment, but we still let price confirm before we go heavy. So here's the pick one framework to end on. We write down 3 things for each coin: the closest support we'd buy near, the next resistance we'd take profit into, and the invalidation level where we cut. The coin with the tightest invalidation and cleanest path to resistance is usually the best risk to reward. Now drop a comment. If you could only pick one of these 5, which one are you choosing? Let us know down below. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto, no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We've already given away thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.